Let me know if this sounds like you. So you're doing great at the beginning of the week. You are fresh, your mind's clear, and you make some really good trades and you're overall green. But come towards the end of the week, usually Thursday or Friday, next thing you know, you have broken some rules, you have made some trades you shouldn't have, oversized, all that good stuff, and now you have either blown that account or at least lost all the profits you worked so hard for. This sends you into a vicious cycle of gambling habits, not following your trading rules, and it just feels like you have fallen off the wagon and you don't know how to get back on. The one that was profitable, the one that was working, the strategies that made sense, you just don't really know what happened. Over the years, I have fallen victim to this pattern so many times. So have many traders, if not all traders, at some point in their trading career, where you just need to reset your trading strategy. You need to sit down and say, okay, if I don't take a break for a week and reset things, I'm never going to get back to the profitable trading strategy, or at least making money, which at the end of the day is the goal of being a trader, right? We want financial freedom. We want to be able to make money, not lose all of our hard-earned capital. We're going to jump right into part one, but before we do, I just want to warn you guys that I will never direct message you on any platform. Those are all scammers. Please block and report them. With that being said, let's dive right into part one of how to reset your trading strategy and become profitable in 30 days or less. So step number one is you need to analyze your trading performance data. So this should include numbers like your win rate. How many trades are you winning? How many are you losing? This should include data on times of day that you might be doing better than the other. And it can also include data on how many trades you're taking, if you're over trading, all of that stuff we need to know. So if you need to pause this video, I highly encourage you go find that data really quick, grab a screenshot of it, and that way you can at least have it for reference as we work our way through, because you're going to need to know your trading data, right? If you don't analyze that, then that is your first big mistake, because it can give you a lot of good information on where you might be going wrong. So when I was on a losing streak, what I would often do is look at my data, and there was some clear, obvious differences when I was winning versus when I was losing. And so one of those things was actually frequency of trading, so how often I was trading, and then assessing the times I was trading during the day. Based on this data, this is where I found my sweet spot with my trading plan. And that was, one, I was trading way too much. So when I started to lose, I would probably trade 4 to 5 times the normal amount that I would on a normal winning day, because I'm constantly trying to make up for those losses, right? So when I would get in those losing streaks, my trading frequency was increasing and I wasn't holding my trades as long as I usually was. I was cutting them very quickly because I was nervous, right? I was nervous I was going to lose more money. So let's start there. Let's say that you look at your data and you're like, okay, the weeks that I'm winning and doing well, or the days that I'm doing well, I am not taking that many trades, maybe like 2 to 3. You could be a little bit more on the higher side, around 5. But I feel like most people's sweet spot is around 2 to 3 trades per day, at least if you're shooting for A+ setups. But when you're losing, you notice that your data says you're taking 15 trades or something crazy like that. That's the first thing you can assess with your trading plan that we're going to go over today and how to reset, is how can you prevent yourself from over trading, especially when you start to break your rules, right? Because that's ultimately what leads us to blowing our account. So for me, I included the rule that I would only take 3 trades per day, and any trades over 3 had to be justified in some way, shape, or form by me writing down why I was about to take that trade. So I did this for a few years, and it honestly is so simple, but it helped tremendously. So anytime that I went over 3 trades, again, I had to write down why I was going to take that trade before I took it. And this kind of snapped me out of that gambler cycle of just taking every trade that I saw. So I highly recommend looking at your trading data. If you are that type of person who has a sweet spot between 2 to 3 trades, and you notice that you feel good trading that amount, you feel like your numbers are better trading that amount, your win rate is better, then you need to stick to that. If you are somebody who does well with 15, 20 scalps a day or more, then that might not be your issue, right? And then we can move on to the next thing, which is, what time of day are you trading? So do you have a trading window that you follow? So this was the second thing that I noticed by studying my data is, for example, we have RTY up on the screen right now. What I noticed is if I was trading market open, or if I was trading around big news events. Now, these are very obvious, but to some traders, it might not be. So these big massive spikes right here, so if we zoom in, you see this massive candle at 8:30. Well, that's due to big news dropping at 8:30. So if you are trading big news events and you're seeing your data is showing you, hey, there's no strategy there, which there never is, then that makes sense to avoid big news events, right? Or what would probably be more common for most people, at least what I found for myself and other members, is avoiding market open. So if you look at market open on many days, there is a lot of volatility, so the candles are larger, but there can also be a lot of chop until we figure out where the market wants to go direction-wise. Now, I will say this is more accurate for the first 30 minutes of the day. After 10 a.m. Eastern, you will start to see some direction form typically, but I will say at least avoiding the first 30 minutes of market open made a huge difference for me. So now today I actually avoid the first hour of open. That's just personally my trading strategy, my trading window. And then I also trade in pre-market sometimes, but overall I like to avoid at least the first hour. Now, just the 30-minute rule is what I started with. So I noticed that most of my losing trades came between market open at 9:30 a.m. Eastern for me into 10 a.m. Eastern. And if I would have just waited until after 10 a.m., things calmed down a little bit and I got more of a clear picture of direction. I tend to do much better, but I was constantly digging myself out of a hole that I created from that first 30-minute window. So the next thing you just need to look at is there any correlation between you having big red days if you're trying to maybe trade on a CPI data type day or when FOMC members are speaking. Those big news days are going to be horrible days to trade altogether. Or is it just you attempting to scalp or trade market open and you're not prepared for that volatility? So that would be the next thing that I would dive into. And all of this, again, needs to be done by you analyzing your trading data so you can see the numbers and see truly comparing one week after the other, green weeks versus red weeks. Do you see anything that can give you a pattern where you can create trading rules around that? That is going to be the most helpful when it comes to resetting your trading strategy, is finding out where you're going wrong and stopping it so you don't do it in the future, right? So you don't repeat the same mistakes. All right, moving into part number 2. And part number 2 is you most likely are falling victim to over analyzing every trading strategy. You are most likely falling victim to the hundreds of YouTube videos telling you this indicator is better than this one and you should have all of these on your chart and be paying attention to this and that and this and that. When in reality, most of the time, that was what was happening to me is I was looking at other people's trading strategies. I was watching YouTube video after YouTube video, and I was grabbing all of this information and I was trying to use it all, test it all. And that led me to my charts looking like a circus. And I noticed that the more indicators I had on my chart, the more things I was trying to study, whether it was, RSI, VWAP, the 200-day moving average, 50-day moving average, MACD, there's so many, right? There are so many indicators and strategies you can possibly use. But the more that I was studying and trying to implement these indicators and trading strategies, the more lost I became and the more losses I had. Part 2 is just get back to the basics. So if you cannot trade and win with a basic price action strategy that might include 1 to 2 indicators, in my opinion, you have no business trying to add more indicators or add more things to look at. So again, this is just all what personally worked for me, but what I did find is when I removed everything off of my chart, it was like I could see again. It was like I really understood, okay, now I can see price action clearly enough to see trend, to see basic supply, demand, support, resistance levels, key levels, right? I can see what I need to see in order to start to grasp the trend and understand the trades that I need to take. But when you have your charts so cluttered that you can't even really see the candles forming because there's so many things that your brain is trying to factor in, that is where I feel like a lot of traders go wrong, is because they're just in information overload. So part number 2 is getting back to the basics. Was there a point in your trading career when you first started to learn some basics and you were doing really well? It was ironic because I remember when I was trading, when I worked a full-time job, oftentimes I was doing better on my phone because I was looking at very simple charts. I was looking at just one chart with price action and maybe 2 indicators max on it, if that. But when I was at home on my laptop and I had a day off where I could fully be engulfed in the charts, I was doing not good. I was losing money. And that was oftentimes because I was, one, over trading, right? We already talked about that. But 2, my charts at home on my laptop were just chaotic. They were a mess. There was too many things my brain was trying to focus on. So when it comes to getting back to the basics, what I personally use every single day, and I've always came back to the simplicity of understanding trend lines, of understanding market structure and key levels, right? You can take it as far as you want to, but if you can't trade off of basic price action, trend, and understanding just basic support and resistance, then I think you're going to have a very hard time trying to win at your trades with 15 different things on your chart. So that could be personal opinion, but we can do a quick example I didn't even plan for right here. But if you draw this key level out, this was old resistance turned to new support. So just a basic simple trade is set an alert when that key level is revisited. If it hits and it holds support again, then look for a buy. If it hits and it does not hold support, I would be careful continuing to short because we're already pretty far down in that move, but you could look for continuation if we start to form resistance under. So it's just using your basics, right? Don't forget that basics work for a lot of traders. And oftentimes the more complicated you make it, honestly, it's kind of like you start going backwards. You just have too many factors to take in before you take a trade, which makes you hesitate. So for part 3, we're going to go back to my old friend SPY. And that is because over the years, I have traded many different things. And so I started out with stocks, swing trading stocks, which moved into penny stocks. And then I moved into options trading. And now what I currently trade is futures. But what I want to highlight with part number 3 is there were certain times in my trading career where my lifestyle was not matching what I was trying to trade. And so to reset my trading strategy, I had to understand, am I trying to trade something that's just not working for my current availability? You know, certain trading styles are going to take way more screen time or going to take way more of your attention. What I want to do with part number 3 is just give you guys some things to ask yourself. And based on your lifestyle and your personality type, which I do have a quiz linked down below, which will analyze your personality type and match you with the best trading strategy based on your lifestyle, all of that. So if you're interested, I would check that out after we get done with this video. But there's some key questions you need to ask yourself. And then analyze your red days and see if you have any correlation there, because I know I did. So when I worked a full-time job that required a ton of my attention, I was trading stocks and swing trading stocks specifically. And this worked well for me because 1, it didn't require a ton of attention and I was able to go about my day during work, set alerts, and not have to worry about the extreme volatility that comes with something like, let's say, options or futures, for example. So that worked for me. But then I started to move into penny stocks, and penny stocks are hit or miss. Back then they were great. You had at least 1 to 2 runners in pre-market every morning, and during the day there were really nice runners, especially after that first hour of the day had passed, and I did really well with those. But I came to a point where it was no longer working. And 1, that was because I was seeing a lot of inconsistency, right? And at that point, I wanted to be more consistent with trading. I wanted to be more profitable. And I'd have maybe 1 or 2 trades per week that worked, and then I'd go a week and I wouldn't have a winner. And it was just really messing with my head. So that's when I decided to move into options trading. Now, options trading obviously provides a ton more volatility, but opportunity as well. Now, the problem there is I was still working while I started to attempt options. Now, this wasn't when I fully dove into options. This was when I just started to get my feet wet and explore it. But I started to lose a crap ton of money because I was not prepared for theta, 1, which theta will just eat away at your premiums, especially if you're trying to trade more volatile short-term contracts. And if you're working a full-time job and not able to monitor those trades throughout the day, it can just become a disaster. I want you to analyze your performance data not only on frequency, time of day you're trading, but is there a difference on what you're trading? So maybe you're just trying to trade something that is ultimately working against you. Now let's move into my journey of where I went from options to futures trading. And honestly, I really wish when I worked a full-time job, I knew about futures trading versus options trading, because I feel like I would have been way further along way sooner. And the main reason being is because with futures trading, you have the flexibility to trade in pre-market. you have flexibility to trade evening hours, even though I don't really like doing that because volume is lower. But that was why I kind of stuck with stock trading a lot of times, is because at least I could trade those in pre-market. Options I couldn't. And so if you are working a full-time job and you are able to get up earlier, the really cool benefit of something like futures trading, so SPY is the options version of tracking the markets, right? But if you are looking to trade the futures version, that would be ES here. And so for me, I can have the flexibility to trade in pre-market. I have the option to sit on positions and let them play out with bracket orders and not have to worry about theta eating away my premiums. Overall, they just work better for somebody who works a 9 to 5, at least in my opinion. They still are small account friendly as long as you pick the correct futures broker, or you can go the prop firm route. But overall, part number 3 is just to get you to assess what you're trading and see maybe if there's a better fit for your trading style. Or let's say you analyze your trades, right? And this was my problem, is you see a lot of your big losers are coming between Thursday or Friday, most of the time Friday, and it's you trying to trade 0 DTE options and you're just gambling all of your weekly profits away. I would do that one too many times. It was just enough times to leave my account hurting, and it just was more me disappointed in myself because I had such great discipline all week, but when it came to Fridays and those 0 DTE, there was something about gambling on those that I just could not break. And so that's where I really found a lot of value in futures, is I can still get the volatility, the leverage, the money that I was potentially making. Now don't get me wrong, 0 DTE 400-500% runs on options is great. But that's like your little unicorn trades, right? For me, the important part was consistency. It was less stress. It was being able to do this and replicate my trades. Yes, a 400% runner is great, but how many times can you consistently do that without gambling, right? And so anyways, that's where I landed on futures, and I really wish I would have started there in the beginning. But part number 3 for you guys resetting is, what are you trading? Is it working for you? Or is there some things working against you? All right, to summarize everything we went over, part number 1 is mainly analyzing your trading data and seeing if there are patterns between times of day you're trading or how often you're trading, and if you're over trading, right? So see if you can make some rules to help combat any of that if you're having those issues. Part number 2 is getting back to the basics. So understanding basic price action, technical analysis, understanding how to read the charts without 500 indicators on it. And then if you want to add and layer things on top, if your brain can handle all of that, that's awesome. But go back to the basics, just reading a chart as a chart, right? And not having so many things that you can't see what the chart's actually doing. And then part number 3 is analyzing what you are trading. So for example, if you're trying to trade volatile option contracts and theta is eating away your premiums while you're working, or if you're trying to trade stocks in pre-market, but the volatility isn't consistent enough for you to have weekly profits. That is where I would probably look at something like futures. I personally love them, and they provide opportunities every single day and every single morning. So if you do work a 9 to 5 job, that could be more flexible for you. And if you guys are interested, I have a free futures workshop linked down below that will cover all things futures trading, prop firms, the route that I went, my trading broker, how to get started with a small account, and much more. And then also that quiz that I mentioned is linked down below as well. Just a second reminder, please never fall for scammers, right? If anybody direct messages you or sends you a friend request on any platform, just know it's not me. It is a scammer. They are everywhere. And that's a wrap. I appreciate you guys so much for watching today. And if you guys enjoyed this video, make sure to give it a thumbs up. I really hope that this can help reset your trading, because it has helped me over the years. It's not complicated. It's just 3 steps, but if you take the time to actually implement these over the next 3 weeks. So maybe week 1, week 2, week 3, you focus on step 1, 2, and 3. And then week 4, you paper trade to see if you have truly reset yourself. And then if you're feeling good, maybe you can get started back on the next month to follow. So that was what I did, and it worked for me. But anyways, thank you guys again for watching, and I'll see you next time.